Hey traders, I just want to bring your attention to dollar CAD, also known as the loonie, on the weekly time frame. We were blessed with a bearish pin bar reversal last week, as you can see here, but this isn't just any old bearish pin bar reversal. This is quite a significant one, given that we are at a bit of a crossroads for dollar CAD. As you can see with this, what is arguably a complex retracement here from September 2017 to the present, we can see that ever since the high here in 2016, January 2016, we've seen the US dollar has been making lower highs and lower lows ever since. So we drag our Fibonacci retracement tool from the very high here to this point here, we can see that we're rejecting the 50% Fibonacci retracement. And that is not it, by the way, there's plenty more. What is interesting is we hit the 50 Fibonacci retracement all the way back in June. We've since made a high low, yes, but we've made a lower high here. Now this lower high is pretty crucial because what it says to us is that we are lacking momentum to have taken out the previous swing high here. It's quite telling. It's that the US dollar is lacking the strength to do that. Now that tells us that we could potentially be due a fall and weakness in the US dollar, certainly against the Canadian dollar. So here we go. What is more is the fact that this retracement here from April 2016 to May 2017, a good old long retracement. If we measure it in terms of time and space, then from there to there, we can see that actually this is pretty symmetrical to where we had the start of the phase 2 retracement to the high here. And if this retracement a couple of years ago is anything to go by, we are due a fall now. Granted that ever since we reached the high in June this year, we've made, okay, a high low, like I mentioned, but also a lower high. All right, so as far as time and space is concerned, we're due a continuation to the downside. And looking at these A, B, C, D patterns, so you can see we've got a very complex retracement here. We've got A, B, C, D, there we go, but we've also got A, B, C, D with the overextension. So let's drag point B to point A, and we can see that not only did we have it rejecting the 1.272 before it came down, but the 1.618, which is my preferred extension prior to a movement to the downside. All right, so since we made this high rejecting the 50% Fibonacci retracement level, we have made a high low, but also a lower high. So if we bear that in mind, and also bear in mind that we've got also within this A, B, C, D pattern, we've got another one nested here. So if you take your mind back to this major one, A, B, C, D, with the 1.618, we've actually got another one here. 1, 2, 3, 4. A, B, C, D. Let me just draw this on so that you can see exactly what I mean. So point A to point B, we can see that we've got the 1.272 overlapping with just about the 1.618 and also the 50% retracement taken from this swing high here. So what does this mean for the US dollar versus Canadian dollar now? Well, the fact is we've got a lower high closed as a bearish pin bar reversal last week. So this could potentially represent the lower high in a double top formation. The rejection here was against the 1.618 of the larger ABCD pattern, and of course the 1.272 of the smaller one nested inside the larger one. And we've also got the 50% retracement. But given that we've seen the move all the way back in June this year, back down to make that high low, we've now got a lower high. So this could, like I mentioned, represent the lower high in what could potentially be a reversal. So how are we going to play this one? Well, if indeed it is a reversal and we get a continuation to the downside all the way down round about here, like we did all the way back in May 2017, then we have a range of options in order to play this. So what you could do is you could take the conservative option and just simply place your order below the low of last week with your stop loss above the high. That would be the safer entry. Okay, so let's just draw a profit shooter on here so you can see exactly whether it's worth your while. It's one thing talking about a great setup, it's another thing actually seeing whether it could potentially actually, within the hopes of possibility, net us some good gains. So let's talk about our first target. If we traded this one short, our first target would be the previous swing low here, or indeed a 1-to-1. So there we go, we've got a 1.88 to 1 reward to risk. That's good enough, we've been risking 2%. A number of you I know will scale out at a 1-to-1, so round about down here, that's fine. But ultimately, our target, and please do bear in mind that the bigger the target, the lower the probability is of the market going to our target. That's for sure. So ultimately, all things going well, our ultimate target will be all the way down here. So that's a 5.33 to 1 reward to risk trade. Remember, we risk 2% for every trade we place, so that's ultimately target 2 or 3, depending on where you scale out. And that's potentially a 10.66 to 1 reward to risk trade, or 10.66 to 2 as we're risking 2%. Alright, so that is one way of trading it. That is a safer way of trading it, given that we've got our entry a nice long way away from where the market currently is, just inching halfway up, close to the midpoint of last week. Alright, so we can be rest assured that we're only triggered into this trade if there really is momentum to the downside, because ultimately our entry is far away from where the price is now. So also, as a clue, we've got bearish reversal divergence looking at the RSI setting 6. On one hand, price has made higher highs for the past 3 weeks, but the RSI setting 6 is showing a lower high also. That is significant. So the more aggressive way of trading this one is the fact that we can enter at the midpoint, round about here. Given that it's so close to where the market currently is, you're pretty much guaranteed an entry, or nothing's ever guaranteed, close to guaranteed an entry. However, you don't have the added protection of only being triggered into the trade if we do get sharp momentum to the downside, all right? So you do sacrifice safety with profit potential. However, if we are triggered into the trade and we do get a entry at the midpoint, and given our stop loss will be above the high here and our entry will be at the midpoint, let's just draw that down so you can see exactly what I mean. There we go, entry at the midpoint, stop loss above the high of last week, there we go. So we have essentially doubled our reward to risk. So we've got, for our target 2 or 3 at the bottom, at the previous swing, at the low here, we've got 12.4 to 1 reward to risk. Okay, so as we risk 2% per trade, that would be a 24.8 potential percentage gain. Okay, but that is only if we enter at the midpoint, the aggressive entry, and have our stop loss above the high. All right, so just to recap, looking at this one, we do have a potential double top formation, given that we are poised, according to time and space, for continuation to the downside here with the US dollar versus the Canadian dollar. We've got a 50% Fibonacci retracement. We've got a Fib cluster, given that we've got 2 ABCD patterns rejecting this high here, and we've since made a lower high. So given that last week closed as a bearish pin bar reversal, we are anticipating that this could potentially be the acceleration point for continuation to the downside. We've got the choice of 2 options. We can either take the safer option by having our entry below last week's low with our stop loss above last week's high, or we could take the higher risk option where our entry is at the midpoint with our stop loss above the high, and depending on which one you take, would look to scale out half the position when we get to a 1-to-1, and then scale out at this previous low here made on the 1st of October, just above it, and then we can enjoy a potential ride down if it happens, bearing in mind that we need to wait possibly quite a long time. But given the length of time it took the US dollar to weaken against the Canadian dollar back in May last year, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 15 weeks, we won't be waiting nearly as long as we did for this complex retracement to form from September 2017 to, well, dare I say, November 2018. All right, so the old adage, the bull climbs the stairs, the bear falls out the window. All right, so that is dollar CAD on the weekly time frame. Happy trading, folks.